I'm George Ratiu, Senior Economist with Realtor.com. The Olympic Games in Tokyo are providing a welcome reason to cheer on athletes and celebrate their training and accomplishments. At the same time, they are a reminder of the unusual times we're living. We had quite a few economic and real estate indicators this week. An important one, the initial estimate of second quarter GDP showed the economy advanced at a strong pace. While growth came in below expectations, the advance was above pre-pandemic rates and driven by gains in consumer spending, business investments, and exports. Bolstering the economy, orders for durable goods rose again in June as demand for cars, computers, airplanes, and appliances surged. Manufacturing companies indicate they could do even better were it not for the lingering shortages of global supplies and local labor. The week's initial jobless claims declined, but the number of people filing for unemployment remained stubbornly high. The number of continuing claims actually rose, a clear indication that we are not out of the woods on the employment recovery front. The broader economic expansion was noted in the Consumer Confidence Index, which increased to a 16-month high in July and approached pre-pandemic heights. Solid macroeconomic improvements were also mirrored in this week's Federal Reserve announcement. The Fed left its short-term rate unchanged and pledged to continue supporting the recovery through asset purchases while leaving the door open to adjustments in the months ahead. The return to ordinary normal continues in real estate markets as Americans refocus on vacations and travel during this summer. Sales of new homes declined in June for the third consecutive month and couldn't top last year's pace as prices remained elevated. At the same time, contract signings for existing homes also declined in June, reversing the strong advance from May. Meanwhile, mortgage rates edged up slightly, ending a 4-week streak of declines. However, rates remain favorable for buyers and comfortably under 3%. Encouragingly, more homeowners are moving to take advantage of high prices by listing their homes for sale. Realtor.com's weekly housing update showed more inventory coming to market in 15 of the last 18 weeks compared to a year ago. This week, we also released our investor report. The big takeaway: investors are increasingly competing with home buyers for the same homes. And where specifically? In Phoenix, Charlotte, Miami, Tampa, and Chicago. Enjoy the summer and much deserved time off. And we'll be back next week with another update.